Good afternoon, everyone. It's about 3:05 here on a very wet and dreary day in West London. A very wet and dreary couple of days on the American market, as you can see. Uh, Yesterday, I've entitled this video with a quotation from Mutiny and the Bounty, where Captain Bligh says that beating will continue until morale improves. That's certainly what happened yesterday, and the market fell and fell hard, as you're all probably well aware. So on VectorVest, we've got a down situation, but the longest term measure of the trend and the medium term measure of the trend that I'll show you in a second have been down for quite a few days. As you can see, this long term measure of the trend on VectorVest, way back from February the 17th, telling us that the trend was down. And that it was not a safe time to be buying stocks. So that has been a really cool indicator in this bear market that's lasted now, what, a year, 15 months. So if we have a look at the chart, and that's the chart of the VectorVest composite over the last year, and we can have to go back for a bit further to see the top last November. So if we look at it over the last year, and I put on the longest term measure of the trend on VectorVest, which is these signals called confirmed calls. You can see that the rallies here have really come to nothing. The definition of a bear market, that wasn't a bad one last June, July. This came to nothing, and this has been a tradable swing trading rally. There's no doubt about that. But as I said, in the middle of February, the confirmed call system said that the market, in fact, was selling. The confirmed call system made up a very interesting mixture of price, momentum, and breadth of the market. The number of shares on the VectorVest buy divided by the number of shares on the VectorVest sell. So it looks at the breadth of the market as well as price and momentum. VectorVest advocates caution buying stocks at this time. As you know, I have a background in technical analysis and I can't resist drawing trend lines. And if we have draw a trend line from that low up to here, we can see that this broad measure of the market, remember the VectorVest composite is a measure of 8,000 plus stocks. And we're sitting right at support here. I think this is a very important level, and certainly a couple of closes below that level. And I think that we would see a fairly fast and rapid fall. As you know, there's some very big names, vocal big names, calling the market much lower. I think the cheerleader is Mike Wilson from Morgan Stanley, who's calling the S&P down to 3,200, which is a long way from where it's at the moment, 700 points away from where it's at the moment. But I noticed as well that Morgan Stanley have also upgraded the price on Apple to 180. The cynic in me tells me that when big companies upgrade their price, it's they're trying to get rid of some of it, but maybe I'm getting too old and cynical. So just watch this level, folks. Down below this level, and I believe we'll see a fairly fast run for the door. All right. So if we now look at the S&P, and that's the S&P over the last month. These are daily bars. This was this big bounce that we had last week. A very tradable bounce. I'll show you. It's very easy to trade on the 15-minute chart. And if we go a little bit further, not that far, we can see that this low on Thursday was exactly to the tick a 62% retracement. Let me take this one off so you can see the wood for the trees. That was exactly a 62% retracement of this range. And if we were to go a little bit further, I won't bore you, but if you go down to this one, it's a 38% retracement of this one. So we've got a major confluence of Fibonacci support at that particular level. And to add a little bit of extra oomph to it, we have what the Fibonacci people refer to as 3 drives to a bottom. 1, 2, 3, 4, and 5. That's the first drive. That's the second drive. That's the third drive. 3 drives to a bottom, and certainly on many stocks, including Apple, there was a lovely falling wedge in that period. There's a falling wedge here as well. It's not that pretty. My stochastic was right down in the oversold area, and I was looking for a bounce last week, and I got stopped out on Monday, I got stopped out on Tuesday, 2 small losses, and then I hit pay dirt on Thursday and Friday and held it overnight. Rarely do I hold them overnight, but I felt the Johnny come latelys would jump in on Friday after that outside bar. And then all of a sudden Powell spoke yesterday at the open, and we sold off. Now we're at a very important level today. I know I always say that, but if we now draw a fib from here to that high, we can see that we're messing around that 62% level. I hosted a meeting last night for our subscribers in Manchester, and we noted that that was a really important level because there's resistance there, and that resistance coming support. So I favored that level for a bounce today. Market opened down, and now it's starting to reverse. We shall see what happens. Let's have a look at this intraday. I trade intraday. For a lifetime, I traded 5-minute bars, but I'm getting old. So now I've decided from about 6 months ago to trade 15-minute bars, and I found the going much easier indeed. So how do I trade it? Well, I assure you fairly simply. The old exponential 21 period moving average. I don't think I could be simpler than that, could I? Don't much look at the stochastic intraday. I don't look much at the momentum intraday. I think that they're valid tools, but I can sort of see when the momentum's waning without the tool. This, I suppose, yesterday should have been a trade, but as I say, that was the opening bar, and it broke right down through those lows, but I was on my way to Manchester yesterday, so I didn't trade that. This last week was quite easy, and I held that the whole way up, largely because of the action on the daily chart. This is a very important level, folks, this fib level, and we seem to be finding support here, and I certainly, if I got a signal here, would be interested in taking a long here. Just a short-term trade that maybe lasts an hour, a couple of hours, if the signal does arrive. So I'd like to see some form of candle, positive candle pattern. I would like to see it close above the 21 period moving average. Life gets a lot easier when you're trading with the 21 period moving average, even on an intraday basis. But on the longer term perspective, everything is down. And if I go back to the VectorVest composite, that's the longest term measure of the trend that we've got. The medium term measure of the trend, in fact, called the tops and the bottoms here a little bit better, but it in fact gave a down signal exactly the same day as the longest term measure. Again, down below this level, and I think we'll see some form of fairly quick capitulation as we sit at this very important Fibonacci level this afternoon. I don't know what's going to happen next. I don't know anybody who knows what's going to happen next for sure. Certainly not that guy jumping up on the television every afternoon. So I shall take the signals as they come. From a longer term perspective on VectorVest, the trends medium term and longer term that I follow are down, and I certainly won't be buying any shares in this environment. Happy to trade for income, the 15-minute on the SPX, long and short, and I do it very simply with a few candle patterns and a 21 period moving average. I think that you could add the stochastic to the mix. The stochastic gave a very good short yesterday afternoon, just here with the reverse divergence trade, but I can sort of see that in my sleep these days. So I hope that helped. Just be very, very careful, folks, until we see some stability coming into the market. In terms of Mr. Powell's message yesterday, I didn't think he said anything new. The Fed funds had upgraded peak American interest rates. Maybe the inference from moving from 0.25% increments to 0.5% increments, that's what did it. But nevertheless, I don't think there was a great deal new in what he said. But the market disagreed, sold off hard. Thanks very much. Bye-bye.